trading gold, XAUUSD. There are far too many people who have blown their accounts on this bad boy, and it's because they're not using the proper lot size when it comes to their trades. And today I'm going to be going over and explaining exactly what you need to do and how to calculate the proper lot size when it comes to entering trades on this currency pair. So let's go ahead and dive right into it, guys. So currently I'm on XAUUSD, which obviously is gold for those of you that trade gold. And I'm currently on the daily time frame, but let me go ahead and just zoom into the 1 hour time frame real quick, just so I can get a little closer view on what's currently happening in the market here. Now, when it comes to looking at and measuring the number of pips, as always, we use this little ruler tool here on the left. You'll be able to calculate and measure the pips simply by measuring the distance on whatever you see here. So there is a bit of a nuance and things that you have to kind of understand when it comes to calculating pips on this pair. So before we go into the explanation of calculating, let's talk about what we see on actual MT4 or your MetaTrader 4 app on your phone. So looking at regular Forex currency pairs, you'll notice, for example, like Euro USD, if you're able to calculate the pips in terms of the spread, meaning how far the ask and the bid prices from each other, we'll notice that's 1.5 pips, because going from 0.2560 to 0.2575, from 60 to 75, that's a spread of 1.5 pips. And a shortcut you can look at is simply by looking at this area right here. Just understand that you should just stick a decimal point in between that where you get 1.5 pips. Same thing here, it's 2 pips. Same thing here, it's 1.5 pips. Here, 2.5 pips. And here, 2.4 pips. So that's essentially like a quick little shortcut to understand pretty much the spread in terms of regular Forex pairs. But then when we go all the way down to XAUUSD, which is gold, we'll notice that the bid and the ask price, it goes from 80 to 96, which translates to 16. And in terms of counting pips, the way we would actually do it is the same thing, just stick the decimal place right in between. So the spread would be essentially 1.6 pips. That's the first thing we need to understand when it comes to gold. Just understand the decimal place and the pip counting is a little bit different. Technically, you can kind of look at this and say this has a spread of 1.6 pips, or you can just look at it and see that it's just straight up says 16. Either way, that's not really important when it comes to this. More important is how to use these numbers and calculate the actual trade size, specifically for gold. So let's kind of go back to the actual chart. Now let's go back to that measuring tool. So again, we're on the 1 hour chart. And in this example, let's say we want to put a stop loss of 30 pips. The way we would actually do that is measure all the way down to 300. That's the difference that we have to take into consideration when it comes to counting pips on gold. So on TradingView, if you want to do a 30 pip stop loss, for example, you would go down 300, which translates to 30 pips. So let me just go ahead and do like a long position tool here, looking for a buy. And then if you measure out 300, I'm looking at this little number right here. So if you measure out 300, that's essentially 30 pips. So that right there would be essentially 30 pips. So the first step in actually understanding how to calculate the lot size for gold is understanding how to determine and count pips. So if the price goes against you by 30 pips, your stop loss would get hit, right? And we're on the 1 hour chart, right? If the price goes in your favor right here, so we'll say like 89 pips, right? Just move the decimal place over once, just like we did with here, 89 pips take profit. So that's how you're able to count the pips when it comes to gold. If we move this over here, same thing, it was a 30 pip stop loss, and then the take profit got hit at, in this case, like 89 pips, right? So that's how you would be able to calculate that out on gold. And then obviously if you look at it on the daily time frame, this would be like a 30 pip stop loss, whereas we have that 89 pip take profit right over here. So going back to the 1 hour, let's understand how to calculate the actual lot size we need to have in order to have a rules-based money management approach when it comes to trading gold. So the first thing we would do is go ahead and you can just simply pull up in Google any position size calculator. This is the one that I use, but any of them would actually work. So just click on your favorite position size calculator and let's go over what to type and how to type it to determine the actual risk size when it comes to trading gold. So the first step we would actually do is we would need to make sure that we choose gold XAUUSD for the actual currency pair that we wanted to trade. And then next, make sure you put your account currency in, whether your account is in US dollars or Canadian dollars. Make sure it's very important that you put the accurate one in this field right here. Next, we have to figure out what our account size is. So in this scenario, let's just say our account size is 7,000 US dollars. So 7,000 bucks is our account size. And let's say in this scenario, we want to risk 2% of our account on this trade. And let's say in this case, we had 30 pip stop loss, or in other words, SL, right? So 30 pip stop loss, $7,000 account. We want to risk 2% of our account on this trade, and we have a 30 pip stop loss, right? So we would just simply plug those numbers in and be mindful of one specific part. One thing I do want to kind of make sure you guys understand is whenever you are looking at a regular currency pair, the trade size lots, leave this alone, leave it on 1. And whenever you're looking at gold, leave this how it is as well. So just leave that alone and just kind of follow along. So we're going to put our account size at $7,000. And just as I mentioned, we're risking 2% of our account. Just know you can also swap it with money. So if you want to risk a certain amount of dollars, you can put the dollar amount here. If you want to risk like 500 or let's say 100 or 80 bucks or whatever. But let's just kind of stick with the percentage. We're going to risk 2%. Now, this field here, in terms of stop loss, pips, this is how we are able to calculate the risk and the actual lot size. So whenever you're calculating lot size, it is essentially a requirement to first determine how far you want your stop loss to be. In this case, we mentioned that we want a stop loss to be 30 pips, which is right over here. So what would we type on the actual position size calculator? We would type the same number that is shown on actual TradingView. So even though we have a 30 pip stop loss, we would actually write 300. So just know that's the number that you type here. So we're going to type in 300. That's going to be the stop loss. And then we just simply hit calculate, and that's going to give us the calculation of the lot size and the amount of money that we'll lose if we get the trade wrong. And we'll see that the lot size, in order to enter this trade based on our parameters, the size would need to be 0.47 lots. So this is a number, 0.47. This is a number that you would need to type on MetaTrader 4 on the phone. So whenever you're on this page to enter your trade on gold, you would need to change this number, the 1.00. This is the number that you would need to change to 0.47 in terms of the actual lot size. And then next, if you're looking for a buy, like in this case, I was looking for a buy, your stop loss would need to be written right over here. But on TradingView, we've obviously already calculated 300 pips. So we would just simply copy this number here, 1798.96, plug it into this field right here. And now we have our stop loss parameter selected, and we also have our proper lot size. Going back to the actual position size calculator, we'll notice that in this case, we are willing to lose $140 on this trade, which, if you do the math, is 2% of $7,000. Now, in this case, if the price ends up coming down here, we're going to lose 140 bucks. But if the price ends up coming up here to our take profit, notice that in this scenario, we have a 3 risk to reward ratio, which means if we get this trade right, we are going to make 3 times as much money as we risked on this trade. So the downside is 140 bucks and the upside is 420. Nice. And one thing that's super important, a lot of people ask me is, how come the position size calculator doesn't ask me for the leverage that I have in my account? Now, to make sure that we're all on the same page here, just know, I want to make it very clear for everyone, is that the leverage is irrelevant for this equation. In order to determine your risk, in order to determine the lot size, it is completely irrelevant as to what your leverage is on your account. No matter what leverage you have in your account, that's not going to change these results that pop up. So don't worry or focus too much about what your leverage is, because it is completely irrelevant when it comes to the actual lot size and the amount of money that you'll win or lose on the specific trade. Leverage does matter for other reasons, but not for calculating your actual position size. It's very important that you do understand that. Next thing I quickly want to remind you and refresh your memory is make sure your account size that you plug in this field right here, make sure it is the current account size at the time of you actually inputting the trade. So for example, most times, more likely than not, your account size is not going to be a perfect even number. So you're going to have most of the time some arbitrary number that's not perfect and even. So for example, you might have an account that's $9,734, right? So that could be your account size. Make sure you are accurate to the dollar of what your account size is, and then you also plug in the percentage of that account that you want to risk, right? So let's just say 1%. We want to risk 1% of this amount of money. And let's say our stop loss is 30 pips. We hit calculate. Well, guess what? This is 1% of this. You can kind of easily see, we just kind of move the decimal place over. So this is risking 1%. And also notice, depending on how big or small we make our stop loss, so let's say our stop loss was 50 pips, which we would put in the 500 for 50 pips. Notice we still are going to lose the same amount of money, but the lot size is going to change. So let me hit calculate and you'll see this will stay the same, but this will change right there. So our stop loss was bigger, which meant our lot size was smaller, right? So let's say instead of risking 50 pips or 30 pips, let's say we risked 18 pips, right? So 180 is what we would type, which is 18 pips in this case. Our account size is that, I guess, and then we hit calculate and you'll see that the lot size got bigger. So essentially, the tighter your stop loss is, the bigger lot size will become to allow you to lose the same amount of money if you get the trade wrong. But it's very important that you don't put something on accident like 30, thinking that's 30 pips, because in reality, when it comes to your MetaTrader 4 or the app on your phone, this is essentially like 3 pips. So you'll see what the lot size shows, 3.24 lots. And remember, on this screen that we saw right here, the spread, just the spread for gold was 1.6 pips. So if the spread is 1.6 pips and your stop loss is, in this case, reality is 3 pips, you're going to get hit with a stop loss pretty much almost every time. So make sure that you are careful and you understand when you type it in here, always you add an extra 0. Or in other words, simply put, just make sure you just simply copy this number here. It's very simple. And one quick small little tip I want to give you is if you just double click on this little long position tool or short position tool, you can put in your account size. Let's say you had a $5,000 account and let's say you wanted to risk 2% or whatever, right? Let me fix that to 5,000. Risking 2% of 5,000, if you do the math, you'll notice that's $100, right? You'll lose $100 if you get the trade wrong. And you just hit OK. And notice this will show you how much money you'll lose if you get the trade wrong, right? So we have a $5,000 account. We're risking 2% on this trade, which means we'll lose $100. So if we get the trade wrong, this will be what will be left in our account. If we change this to 1%, notice that will get updated as well, right? But going back to 2%, and I want to show you, no matter how far or wide you drag this will always remain the same, because the whole point of money management is we're willing to lose 2% of our account when the trade hits our stop loss. So this number will always stay the same. But what will change is this top number here, because if we get the trade right, this is what our account size will be once we get the trade right. So notice the tighter that we're able to make our stop loss, the bigger this number will get, because the risk to reward will increase, because as I mentioned earlier, the tighter your stop loss is, the bigger the lot size will be. So let's say we had a 15 pip stop loss, calculate, be 0.65 compared to a 40 pip stop loss, which is 0.24. Very important that you guys understand, the tighter your stop loss is, the bigger your reward will be in terms of risk to reward. But the downside to that is you have a lot higher chance of getting stopped out. So be very, very, very careful. It's not all about getting the best risk to reward. It's about managing your risk properly. So I hope this was useful for those of you that want to trade gold or maybe do trade gold and want to start trading gold with proper actual money management and using an actual position size that correlates to your account size. It's very important that you choose proper risk management when it comes to trading anything, especially gold. And it's very important that you do understand how these numbers are calculated based on what you see on TradingView and comparing that to the numbers that you see on MetaTrader 4. So hopefully I was able to link both of these two platforms together for you so you can see the difference of how much money you'll make, lose, and what your position size should be based on these different tools. If you found this video helpful, go ahead and hit the like button, and I'll catch you guys on the next video. Take care, guys.